topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome. It's another great Monday morning. It's great to be here talking about taxes. Hey, today, talking about tax problems, IRS audits, solutions to your tax problem. We're going to get into talking about the various types of solutions to your tax problem. And then later, we're going to talk about IRS audits and handling your IRS audit and what you need to do to resolve that audit as well. When we talk IRS solutions, people have problems all across the country, and they seem to be getting worse rather than better these days. So, don't feel bad about having an IRS problem, because they happen for all various reasons. And we don't pass judgment here. So just call us at 888-930-1016. Again, 888-930-1016. And we can help you, whether you have an IRS audit, whether you owe the IRS, $10,000, $20,000, $100,000, $1 million, whatever that number happens to be. We're not passing judgment on you, because life happens, and that's just the way it goes. We try to find what can be the solution. So, if you owe them, 10, 20, 50, $100,000, $1 million, whatever it is, your solutions can vary. The IRS immediately just wants to put you on an installment agreement. Actually, what they want you to do is just full pay. Hey, suck it up, buttercup, and just pay the full amount. Now, we know that's not always possible. If you happen to be sitting on the cash or the money, pay it. It cuts down the interest and expenses, penalties, and everything else, and just get it out of the way. But if you don't have the funds, the first thing the IRS wants to do is put you on an installment agreement. And, we talk about this, and, they try or want to be helpful. Ronald Reagan said it best. When they say, I'm from the government and I'm here to help, run quick, call us. Again, it's 888-930-1016. Let us put a real solution in place for you. Get strong representation so that, hey, that you got the right solution to your problem. And maybe we'll get penalties abated. We're going to work on all of that for you to save you as much money as possible. The second solution that the IRS has is maybe non-collectible status. Hey, you can prove or show to them that you can't afford to pay them anything each and every month. The IRS will put you on that for a couple of years. If they see your income go up, guess what? They're coming to you to redo it and put you on what? A payment plan. Because that's what the IRS really wants you to do, is pay this debt back. Now, another solution that is out there, and this isn't easy, it takes a lot of time to get done, is the offer and compromise. And the offer and compromise is where you're settling for a lot less than what you owe. You hear some of these ads when you settling for $1,000 on a $20,000, $30,000 tax debt. It can happen but it doesn't happen for everybody. So don't believe everything you hear. And just because you hear it on the radio doesn't mean it is right or the solution that you would qualify, because an offer in compromise requires looking at everything from all your assets, your equity in your house, anything that you possibly own out there, business valuations, life insurance, you name it, and income coming in, regardless of your expenses going out. Now, what the IRS does in that case is looks at national standards and determines this is the amount we allow. Get that? IRS allows you to spend for your house, spend for your clothing and food, vehicles, insurance. This is what is allowed by Big Brother. Yep, the IRS. So, you've got to take all that with a grain of salt and go through and determine, hey, what is correct? What isn't? So, got to remember that there are some national standards out there based on where you live, a number of people on your tax return, not in your household, on your tax return that is reported and you're claiming. So, there's a lot of variables in that. Not everybody qualifies. Now, one of my favorite tools that we get to use, that if you don't qualify for that offer in compromise, or maybe you do, there may be some better ways around it because of the constraints and restrictions on the offers in compromise. Maybe you can afford to pay some money, but not all of it. Maybe you have a little bit more money coming in, so you don't qualify for the non-collectible status. So you get into this gray area and this in between. And what is that? That is partial pay installment agreement. Yep. This is a program that was put in place by the American Jobs Creation Act of 2004, amended IRC Section 6159 to provide authority for the partial pay installment agreement. It means you are going to pay less than what you owe. Now, we use this sometimes in lieu of the offer in compromise. Sometimes it's because statute of limitations are coming up and are going to run out, and there's going to be a bunch of debt that will fall off, and we can't get there by delay or holds, and we need to put something in place that gets you down to a realistic pay plan that you can afford and allows the existing debts to either roll off from statute of limitations or roll off from paying this out over a long period of time, and then statute of limitations running out as well. However, IRS, prior to granting this partial pay installment agreement, IRS is going to do some investigative background. They are going to be looking for what equity and assets you have that you could potentially still access the equity in to pay down your tax liability. So they're going to be addressing like your equity in your house. So maybe you've got to go out and get a HELOC loan, try to get a loan on there and be turned down by several vendors because of whether income, debts, credit, you name it. If you can't access it, we might have to prove it to the IRS to be able to be granted this partial pay installment agreement. But if we can get into this partial pay installment agreement and the CSET's statute of limitations run out, you could see thousands of dollars of debt run out in a short period of time, depending on where you're at with statute of limitations. So this is a good tool we use to get you to where you want to be without possibly going into this full offer and compromise, which again, the offer and compromise has a lot of drawbacks to it. It's a great tool we get to use in our arsenal to solve your tax problem and maybe reduce your debt to a very low amount. But if we can get maybe a better deal through a partial pay, that's where we're going to go because it is less restrictive. So less restrictive, meaning that once you agreed on offering compromise, you got to have full 5 years in compliance. And if you fall out of compliance, all of your debt comes flooding back. And you got to be in compliance from the day you file. So it could be 6 years, could be a little bit longer, depending how long it takes them to process that offer and compromise. And then once it's accepted, it's the full 5 years. Now, in a partial pay installment agreement, yes, you got to maintain compliance. You can't add more debt. You still got to file timely. You got to make sure that you're doing everything correct. But if the statute of limitations have run out and then you fall out of compliance, that debt doesn't come back. That debt is gone. So if it's gone, it's gone. Statute of limitations have wiped it out. So that may be 10, maybe 20,000. It could be a bigger chunk of your total tax debt. And maybe the more current years are smaller. So that got rid of a lot of debt right up front with the statute of limitations. Or maybe you've got 2 or 3 years that are going to run out over the next couple of years. And then you're left with a very small amount going forward. So that partial pay installment agreement did its job and gets rid of a bunch of tax debt from really old years without strings attached of maintaining compliance over that 5-6 year time period. And we're going to continue talking about partial pay installment agreements and what do you need to do to get a partial pay installment agreement accepted by the IRS. And we're going to talk about what is needed right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for you. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for you with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We're talking about partial pay installment agreements, solutions to your tax problems, to get the IRS off your back and what could be your best solutions. Now we're going to be talking about coming up in the next couple segments, we're going to talk about IRS audits. So if you know somebody that's going through an IRS audit, or maybe you are going through an IRS audit, make sure you're tuned in here to Tax Talk for You on W4CY Radio. And if you got friends, man, get them online so they can hear this, because IRS audits aren't fun to go through, and you want the information to be able to successfully defend yourself and know what's happening with an IRS audit as well. But if you do miss an episode, go to our website, taxtalk4u.com. Again, it's taxtalk4u.com. And you can see all of our previous episodes there. We have some great shows about tax solutions, trucker bookkeeping, you name it. But get over there, follow us, and you can see all of our podcasts and everything out there, and all the episodes that you may have missed just by chance. But don't ever miss an episode, because we're here Mondays at 10 a.m. Eastern time. Now, back to talking about partial pay installment agreements. People go, what do I need? What do I need to do to get this? Because this sounds great. Well, they're going to ask for a collection information statement. It's required. That's your 433A and potentially the 433B. So if you're running a business, you'll also need the 433B. IRS is going to compare all this data to your current tax return. So right now they'd be comparing, if you filed your 25, they'd compare to 25. Otherwise, they're comparing to 24. They're going to want to also see that if you had estimated tax payments were supposed to be made, that you're making your estimated tax payments. So I suggest, if we're getting into partial pay, get your 25 filed quickly. Then go in with the 433A, potentially the 433B, and file that, and make sure you start making estimated tax payments for 2026, starting with April 15th's payment, so that you're in compliance. And then the IRS isn't going to have as much of an issue with what you're doing. So the IRS starts looking at this 433. They're looking to see whether your income's up or down. If it's down 20% or more, or assets are discovered to be missing from this collection information statement, you're going to have to explain. So they're going to be looking at that stuff and looking at information and saying, hey, where's this? Now, I've seen where they've come back and asked, hey, what was this vehicle? You didn't report this on your 433. Don't leave vehicles off that are in your name and you still own, even if your kid's driving it. If you gifted it to your kid, make sure that title was transferred over, but you're going to have to explain it. And it may be an undisclosed asset as well, or a dissipated asset, especially if you're going through an OIC. They're going to say it's dissipated asset, and you will owe the money to them, part of the OIC, offering compromise in the settlement there. So, that's information we're going to need to be able to show them and discuss. If you can't liquidate assets or access equity, we're going to have to tell them why, show them the reasons why. If you got a revenue officer, revenue officer is going to secure real property records, DMV records, full credit reports, the whole works. They're going to find what's going on, what you have. We're representing a client right now in the middle of an offer and compromise, and he had transactions from 2 to 3 years ago that were in the $1,000 range that he just pulled cash out of the bank account, but never disclosed what it was for. Now, it's not something we saw because we weren't looking back that many years, but it's definitely something the IRS saw and now needs information on. They're going to do the same thing kind of in this partial pay installment agreement, but not quite as in depth. But they would also consider that to be a dissipated asset. If you pulled cash out and just got rid of it, can't explain where it went, then hey, they could reject your offer. They could reject your partial pay installment agreement. But they are going to be looking for explanations for this data. If you're going into a partial pay installment agreement, the terms can be reviewed every couple of years. So we're using this to get you through maybe statute of limitations. We're not going to be seeing maybe a large change in income coming in. So it may be something we want to make sure that, hey, you're not expecting, a huge raise. So let's say you're making, 60,000 and you're going to go to 80 or 100,000 in the next year or two. Hopefully, if that does happen, you're in a better position, and maybe statute of limitations run out on quite a few years. And so we don't have to worry about it. But usually it's a quicker review, unless your income, again, has significantly increased. If you're basically in the same position and the IRS can tell it from looking at it, their quick review, then you're going to be fine. Conditional expenses generally are not allowed for partial pay installment agreements. They're only going to be limited time that they're going to allow you to adjust your expenses. So it could be a stepped partial pay, something like that, where you get time to adjust your expenses down so that you can afford to pay maybe a little bit more. So it can be something that we can use to limit IRS collections, get through some steps of CSEDs running out, and then make it work for you as the taxpayer in a better fashion than what maybe an offering compromise would be. Now, if you default, guess what? No, debt that fell off from the CSEDs does not come back. No, that's gone. But if you default, you're going to have to go all the way back to step one and have a complete review of your financial position to make sure that you still qualify for a partial pay installment agreement. If you default, maybe you should be into a non-collectible status, being that, hey, you just can't afford to pay, and we can actually prove that. But it's a new engagement, new representation, and we're going to relook at what's best for you as the taxpayer and as our client. You've got to really look at what's going on. IRS does frown on defaulting in partial pay installment agreements. If you've defaulted in the last 24 months, you're going to be required to be on a direct debit installment agreement. They're going to be coming in to debit your account. Now, we've seen people default and direct debit as well. Just because you're on direct debit does not mean you're not going to default, because if you don't have the money in your account, you're not going to pay it. A lot of people default when they're having to go in and make their own payments because, forgetfulness. It was due on the 20th and you didn't think about it and time passed. It's kind of like in our household and scenario, you've got dogs and we're trying to, give them their heartworm medicine every month. And we try to do it on the 15th of every month. And all of a sudden we're here on the 23rd. We go, oh, did we do that? Okay, now we're going to do it. Okay, let's set our reminder in our phone. Okay, that reminder goes off on one of our phones, but not on the other one. And we don't think about it. And now we're in default. And that's just heartworm medicine. Same thing kind of goes when you're making installment agreements. Hey, last thing you really want to do is pay attention to the IRS. We use direct debit for the installment agreements as well as the partial pay installment agreement. Now, if you're in business, the IRS is going to verify income and expenses. You need to make sure you're documenting anything that's questionable. They're going to run records and check on real and personal property ownership. They're going to, if possible, appropriate, they can actually request the sale of or borrowing money off of an asset, including your business assets. They're trying to find and ensure the ability to pay current taxes, operating expenses, and the partial pay installment agreement. So you're having to verify all this information out there. They do a lot of other things before they give you this partial pay installment agreement. And we're going to go over more of that in detail. And then we're going to jump right in to the audits and what happens when you're going through an audit. We'll do that right after this break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for you. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
So partial pay installment agreements is what we've been talking about. And if you're in business, and you have to have a partial pay installment agreement for your personal debt, you still had to file that 433B with the 433A to show them what's going on in your business. They're not trying to put undue economic hardship on you or on your business. They would like you to continue in business, because if they put you out of business, you can't afford to even pay the partial pay installment agreement. And, we know that, they know that. But again, what they're doing is looking for expenses that you're running through there that are personal maybe, and expenses that you shouldn't be claiming that could allow you to have more income coming in rather than less, to get the right partial pay installment agreement for you out there. So they are looking at the business as well to make sure of, income, expenses, and what do you got? And then are you paying the proper estimated tax payments based on what's going on in your business? Now, they're going to first and require estimated tax payments based on your 2025 tax return for 2026. Now, if you haven't filed that yet, they could also go back and look at what your estimated tax payments were due for 2025 and tell you have to catch those up before they would do a partial pay installment agreement. Which would be understandable, because if they accept this partial pay installment agreement, you need to be in compliance, which means you can't default. And filing your 2025 tax return with money owing and not paying it would put you in immediate default. What good would that do? So, we want to make sure you got your 25 tax return filed, make sure you're ready to pay your estimated taxes for 2026, and then move forward from there. There's a lot of things to do, but that partial pay installment agreement is well worth it when you are in business here and you owe money to the IRS, or even if you're a W-2 employee and your income isn't likely to change very much. It's a good way to solve a tax problem, especially also when CSEDs are coming up relatively quickly as possible, depending on when you filed. CSEDs really quick. There is a 10-year statute of limitations for collections. Once the return is filed and accepted, that starts the ball rolling. For the CSEDs, there are some delays and things you could be doing that would delay the CSEDs, but generally you could say it's 10 years from when you file. So if you filed April 15th, 2026, you would have 10 years for that debt to go away, which would be 2036 on April 15th, if that's the date you filed. So now, as promised, what happens during an IRS audit? I've helped people through many, many audits. These are nerve-wracking for the average taxpayer. You're almost like a deer in the headlights when it comes to an audit. You just, oh my God, what's happening to me? And you totally freeze and you have no idea what to do. Well, your first step is calling us at Taxation Solutions at 888-930-1016. We step right into your boots. We're not a deer in the headlights. Man, we're the guys that are going to be out hunting this down and getting it done for you. And I get being a deer in the headlights. It's not an everyday occurrence for you. And not knowing what's going to happen or not knowing what the process is intimidating, scary. It doesn't have to be a high stress event, so let's take a look at it. Audits, yeah, that's not a moral judgment against you. It may seem like it, but it's not. An audit doesn't mean that the IRS thinks you're an outlaw or a tax cheat or gaming the system. The IRS often just calls an examination basically just a review of your records to ensure the information recorded on your return has been reported correctly in accordance with tax law. It could be just luck of the draw. Now, if you're one of those that is a tax cheat or outlaw and you don't use a real number in there, or somebody made it up and put it on your tax return and you didn't review it, didn't approve it, it happens. It gets pulled because of that criteria out there. Or maybe everything's right on your return and you just happen to be going to one of those unscrupulous tax preparers who have cheated many times for other people, and now all their clientele are being investigated, and now they're looking at you. It can happen. And you just don't know when or where, but you got the IRS letter saying, hey, you're going to have the audit. It can be also very onerous and very intrusive if your books and information are completely in disarray. Or if you choose, I just don't want to cooperate with them, go pound sand. Guess what? You tell them to go pound sand and don't answer any of their questions. Everything they're auditing for is zero and no proof. And now you have more debt. Now you've got other problems out there. One of the questions, Joyce, I like your question. How do I know it's the IRS really auditing me? Well, there's a lot of people committing fraud out there and a lot of people pretending to be the IRS. They even say it really differently. Internal Revenue, something or other, and they don't tell you it's the IRS. They don't give you the IRS number, and sometimes they do give you a badge number. But if it's a phone call and somebody telling you, hey, you're going through an audit, hang up. If you're not sure, then you pick up the phone and you call the IRS themselves and ask them, hey, am I going through this audit? Is this really the IRS contacting me? But every IRS audit is initiated through a letter informing you that your return has been selected for examination. It's also going to include the name of the agent, the phone number, IRS ID number, and then you can call them, provide them with that information to confirm that you're actually under audit. And if you're not sure about that one, then call the IRS main number and say, hey, I got this letter. Is this true? And then they will tell you as well. Now, you could be going through one of several audits. You could be going through a correspondence audit, an office audit, or a field audit. Now, it's been a while since I've seen field audits. Most of them are correspondence audits. It's just where they're sending you letters and asking you for information by mail. It's the simplest form of audit. It spots a mistake on your return, say, hey, if you fail to report income or you got a calculation wrong, the agency is going to send you this letter letting you know and asking you to pay any extra taxes by a specific date. In such cases, you can either pay the bill plus any interest and penalties, or let the IRS know that, hey, they made a mistake and here's the support and proof, and provide the information so that the audit can be adjusted. In a full audit via correspondence, they're going to ask for information. They're going to send you their IDR, information document request. This letter is their formal, detailed financial records that they need to back up certain amounts that you have claimed on your return. So if you claimed an expense for your business, the IRS might ask for certain specific receipts, bills, and proof of payment. So you may have to have a copy of the invoice, tie it to the check that was issued to pay for it, and therefore you've got proof that these bills and these things were paid. Sometimes the IRS will take and say, hey, we want to see the bank statements, and you got to provide 12 months of bank statements. And you hope that all the revenue that has been deposited into that account ties to the number that's on your gross revenues, because they're looking for that. They're also going to look when they're going through a audit, maybe they're doing Schedule C, they could pull with bank statements, both personal and business. And then they're going to look at everything deposited into both accounts. Now, they will show, hey, transfers from business account to personal account. But then if there's other money going into the personal account that's unaccounted for as transfers, they're going to ask what that was. And if that was revenue that should have been reported on your business return, then you may have understated your revenue. So they're looking for things like that. If it's gifts from family, friends, whoever, maybe we're giving you money or helping you out to make ends meet periodically, may have to show evidence and proof that this money came from this source. So maybe you pulled money out of an IRA, 401k. We would have to prove where the money came from to show them that, hey, this is where it came from. So they will be asking for that and asking for different information in the correspondence audit. You'd have to provide that. Now, if they're doing an in-office audit, that means you've got to go down to the IRS audit and go over your records in person. Intimidating, because you're sitting there face to face, eye to eye with that revenue officer who is specifying through the IDR, the information document request, of what you have to bring to that meeting. If your records are clear, it might go really quick, but it's not the best idea to show up with a big box of papers and receipts that you need to sort through. You want to make sure you organize everything and dot your I's, cross your T's to keep this thing moving and go through a lot quicker, so that they can match the transactions or receipts to the bank records, so you can get out of there sooner and be less intimidated. So those do go on, but they do ask for the documentation. Hey, we're going to take a short break here, and when we come back, we're going to talk about field audits. What happens when the IRS agent needs to come or wants to come out in the field and see you maybe at your business or at your home, and what are they looking for and what they're going to do. We'll do that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for you. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for you with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Field audits, man, those are the most extensive and intrusive audit you can go through. That actually involves the agent coming out to your home or business to go through your records. You're going to get a longer information document request from the revenue officer. You're going to be able to have time to prepare all the documents that the IRS wants to see, but they may not limit it to just those items. If they see anything large or unusual or questionable items, the audit could be expanded. You know, hey, we had a field audit one time that spanned it over several months. I think the auditor came out at least 10 times over a 6 to 8 month period. We had to be there to guide them through this audit and keep them from doing things. But man, once they're there, they're looking at everything and everything. So you kind of want to get them into a private room. They're going to want a tour of the facility. They're going to want a lot of information. And going from there, if you are a larger corporation, you're going to have probably more than one agent. And you can assume they've done their homework on your finances before the audit. So they're going to ask a lot of questions that they already know the answer to, just to make sure that you're being open and honest. Hey, the real nice thing is if you hire us and we're having to be there and work with you on your audit, guess what? We become the go-between. We get to answer the questions and get you out of there, especially if we're knowledgeable about your business, which we will be by the time this auditor gets there. And then we can have, a little less controversy out there. It doesn't have to be adversarial situation. So if the materials and everything check out, then, hey, you're going to be good. After the audit is done, in any one of them, the IRS is going to report their findings, laying out, hey, this was approved, this wasn't, this was supported, this wasn't. They're going to make the changes that they consider to be warranted. And maybe they find things that you had more expenses and they get you a refund. It's very few and far between do we see that. They're always looking for money, not trying to give money back. Whatever the outcome, you can either agree or appeal those findings. Those appeals are done by an independent body within the IRS that exists to resolve disputes between the IRS and taxpayers. It's kind of like an arbitration panel. If you disagree with appeals, then you can also take them to tax court as well. But what I suggest, prepare. So the 3 P's, prepare. You got to get your documents in order. We kind of talked about this already, but it's worth repeating. If your paperwork is neat and orderly with all your financial statements, bank records, receipts in order, and easy to map out, it tends to make the whole process that much smoother and that much easier. If you're called in for an office visit or subject to a field audit, gather all the documents requested into binders and show the agent that your books match the tax return. It can help make it simple and cut it maybe a little bit shorter, showing that you're organized, you're not hiding anything, and you've done your due diligence in preparing your taxes. That may be, hey, getting your financial statements, getting the general ledger and being able to show that, hey, here's all the expenses and all this came out of this account and we can account for all this. And this is, if you're in the trucking industry, this was all fuel. We've got it. If you've taken mileage, here's my mileage log. It ties to my mileage log. This works. If you materials or your repairs and maintenance, and you've got a lot of repairs and maintenance, here's the receipts for the repairs and maintenance. And here's where I've paid for it. Maybe coming out, if you're in the trucking business, and maybe coming out of your settlement statements, and we can show them that, hey, that you had a maintenance fund and here's what was coming out of this that was used for these maintenance and repairs expenses. So that can be done. We always say, hey, audit yourself, make sure you're checking and dotting your I's and, knowing that what's in your return. Keeping things very organized. Audits sometimes are few and far between. You kind of get forgetful. Some people get aggressive. We were talking with a client the other day, and a new client to us, and they're like, well, my CPA told me I could do this, this, and this. Well, you could do this, but this is kind of stretching into a gray area. If you were to get audited, this could be something that could be a problem. Maybe this isn't a true business expense. This is more your vacation expense. Should you be taking that on your corporate tax return? Probably not. Now, if this was a board meeting and you have everything properly documented, then yes, you can use that. Sometimes being forthcoming. Don't refuse to produce paperwork or be totally evasive when answering questions, because doing that is just going to get them to start being a little bit more aggressive and digging deeper. They're going to find it. If you don't remember the details about particular transactions, just say so. Hey, I'm not really sure, but we can get that information. So they start questioning, hey, what was this? Do you have the receipt? Well, I haven't been able to find the receipt, but I can get it. This is what I think it was for. Maybe I've got to get more information for you. So, you can be forthcoming. You don't have to be evasive. You can still get the time to be able to have the details you need to support and document the transactions that should be on your return. Most importantly, if you're going through an audit, and besides a simple correspondence audit, you can call us. We do free consultations. If we tell you it's a simple correspondence and what to do, hey, great, you can do it yourself. Don't be confrontational about it. Just get it done. But if you're doing an office audit or a field audit, or a full correspondence audit, bring in representation. It sets your mind at ease. And people like us here at Taxation Solutions have the experience in dealing with IRS audits. We have enrolled agents that are on staff that know more about taxes than most people could ever dream of, and have the expertise behind the tax code to get you every deduction possible. And having an enrolled agent here, like myself and my staff, can help clarify technical points with the IRS, avoid confusion, avoid problems within the audit. Not only that, but avoid confrontation. A confrontational audit is probably one of the worst things you could be going through. So therefore, you want to do that. Also, terminology is important. If you're going through an audit and they start looking at payroll and subcontractors, and you use the term, this guy was a employee and he was a contractor, it could get you in trouble with the audit, because they could say, well, you didn't do payroll taxes and they should have been W-2. Need right clarification, need the right terminology. You also got to watch your checks. We tell people all the time, they're paying a subcontractor who is truly a subcontractor, and they're putting payroll on there. Well, the IRS sees that and they think it should be W-2 payroll and you should have been paying payroll taxes and everything. We have a problem. So making sure that you got terminology correct also works. Audit's never fun. It's not the end of the world. You can do a lot to help make the process a lot less painful by being organized, open. You can get through it quickly. You may end up having to pay more in taxes, but representation helps get you through that. And that's what we are here to do. So if you need representation, call us at 888-930-1016. Again, 888-930-1016. If you're going through an audit, have tax debt problems, call Taxation Solutions Tax Relief now, or go to taxationsolutions.net. Hey, the show goes really fast and we get a lot of information out there. Don't forget to follow us over at TaxTalk, 4U.com, or even on our Facebook page, TaxTalk, 4U.com. You can find us, follow us, never miss an episode. We're right here every Monday at 10 a.m. Eastern Time on W4CY Radio, or you can find our podcasts again at our website, or iHeart, Spotify, you name it, most podcast sites we're going to be on. Hey, but above all, hey, keep your head up. If you're going through an audit, get representation. If it's not us, choose somebody. Again, call us at 888-930-1016. Hey, we'll see you next Monday at 10 a.m. Eastern Time. In the meantime, have a God bless and glorious week. Hey, be safe out there. Enjoy the week. Enjoy the time. Enjoy your family. And we'll see you next week at 10 a.m. Eastern Time right here on W4CY Radio.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need TaxTalk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at TaxTalkForYou.com. See you next week at W4CY.com.